the bank failures led us to a 3-day decline in the S&P, a 5-day drop in the Dow. Today started off with a strong rally that has since faded a little bit, as Romain was just telling us. I wonder what this tells you about the state of investor sentiment, the fragility of investor sentiment, and how you determine whether we're past the worst.
Yeah, not much of a breather or relief rally today, and I think part of that extends to the fact that we're headed right into central bank meetings. Remember, this is the real worry about the market all year, and for much of last year was concern about the central bank rate hikes and the pace of inflation, and we're headed right into that. The Fed may indeed pause their rate hikes due to financial stability concerns. We got the CPI number today. That's not showing many signs of cooling, certainly not on the service side. And other major central banks like the Bank of Canada, the Bank of England, the ECB, have assessed the situation from SVB and see little impact on their economies. We'll hear from the ECB on Thursday with a likely 50 basis point rate hike. We've got a number of reasons for that. The European banks' exposure to U.S. deposits is low. They're well capitalized. They're not seeing tightening financial conditions. Underlying inflation pressures remain very strong in Europe. We got some inflation data today for Spain with big month-over-month numbers. And the ECB commentary has been very hawkish, and President Lagarde stressed just last week that a 50 basis point rate hike was very likely. So I think we could see part of a pivot today from worries about financial stability back to worries about inflation.
And right now, I believe the pricing shows that investors expect a 25 basis point rate hike. But just yesterday, they were thinking that the odds for that was about 50-50. How much do you expect that to waver between now and Wednesday?
Well, we'll certainly all be paying very close attention to what we hear from anyone related to the Fed. I know we're in this blackout period, but it doesn't mean there can't be some messages maybe sent through some media channels around what the Fed might do. Often we hear that through the Wall Street Journal reporters or others that might leak what they're likely to do, given the very wide range of expectations. Some are saying nothing, some are saying 50. So it's certainly open to a lot of interpretation and surprise. And I don't think we're in an environment where the Fed wants to create a lot of surprise for the markets right now. So I think we're likely to focus on some kind of message coming from back channels, but we'll all be on the edges to figure out what that is.
Give us a sense here, I mean, where you think we are right now, Jeff, in terms of just, I guess, overall financial stability. Because, I mean, obviously there's so much of a focus on the specifics of what went down with SVB and SBNY and some of these other banks. But there is still, I think, a broader undercurrent of concern here that you had at least certain pockets of this economy, Jeff, a corporate economy, I should say, that really wasn't all that stable to begin with.
Yeah, well, that's true. I mean, we are seeing, I think we're in a recession, but it's a different type of recession. I would say the last two recessions were what I call the everything, everywhere, all at once recessions, where you had everything from trade and manufacturing, services and retail and construction turned down at the same time, everywhere around the world and all at once. Not so much the case this time. We are in a manufacturing and trade recession, but we haven't seen that yet really flow through to services, which have been very strong. Might we see services begin to weaken up in response to some of these concerns about bank financing and access to that? I think it's relatively unlikely, but that would certainly broaden the recession we're already in, and we're headed into an earnings recession as well. This quarter, next quarter, likely to see some declines on a year-over-year basis, at least for S&P 500 profits. So that does create a choppy backdrop in which to deal with questions about financial stability.